are given to understand that the cabinet meeting, which is just concluded, has taken the decision to amend the Income Tax Act. Now remember, we've been reporting for the past 15 days that the Income Tax Act in its present form doesn't allow the penalty of 200% that the government had allowed. That was not legally tenable under the current Income Tax Act. What we are now given to understand is that the government has decided to amend the Income Tax Act. Of course, this will have to now go to Parliament. What exactly will be amended, etc., we are still standing by for those details. But let's bring in our colleagues who've been tracking this story. Also, Mr. Dinesh Kanabar, the CEO of Dhruva Advisors, joins us. Mr. Kanabar, appreciate you joining us. You know, we were having this conversation a few days ago, sir, and we are now given to understand that the cabinet that met short while ago has decided now to amend the Income Tax Act to perhaps make that penalty legally tenable. We don't know if it will continue to be 200% as was the earlier announcement, but perhaps that penalty itself, which whose legality was being questioned, will now perhaps be legally tenable.
I would think that it is consistent with what the message government has been sending out from day one. I remember you and I chatting up post the tweet which was sent by the Revenue Secretary when he had made it very clear that this is not a voluntary disclosure scheme, and any amount disclosed under this scheme or any amount deposited which cannot be explained will be treated as misreported income and therefore will be subjected to a 200% penalty. There indeed was a situation that if there was no difference between returned income and the assessed income, could a penalty be levied? And I had always maintained that if this was the intention of the government, they will amend the law and make the penalty leviable. And from what I hear from you, that's exactly what the government is doing.
Yes, Mr. Kanabar, just hold on, sir. We've got Sapna joining us now. She's been working on this story. Sapna, this is what we were reporting. Any more details now on what exactly the cabinet has approved?
We have been trying to speak to our sources here, but everybody in the finance ministry is extremely tight-lipped. It's a cabinet decision, plus the parliament is also on. It's in session. So my take over here is that the amendments are more or less ready, and most likely the government will table them straight in the parliament. So it's unlikely that there is going to be any official announcement as such. But broadly, basically the steps that have been taken to plug the rate differential under the ongoing drive, which was, as Mr. Kanabar just pointed out, it was never the intention of the government to have that kind of an objective. But it has so happened that the penalty clause has created a bit of a hiccup. So basically, to plug that and any kind of an eventuality that people may get away with lower taxes on any kind of unaccounted money that they're putting in, to plug that, basically a higher tax rate has been suggested, or rather has been cleared, and this could be somewhere in the broad range of 55 to 60%, higher than what has been charged by declarants under IDS, but closer towards what had been charged for undeclared foreign assets that had come under the earlier Black Money Act that the government had brought out in 2015.
Okay, Sapna, just hang in there. We've also got Alok Agrawal, Senior Director at Deloitte, joining us. Mr. Agrawal, appreciate you joining us. We are still waiting for an official confirmation, but we understand that the government has now decided to amend the Income Tax Act to try and make legally tenable this business of the imposition of penalty. Your first reaction, and what would you imagine those amendments to be?
Right. So, Shireen, the view was that if an individual has deposited cash into his account and pays taxes during the course of the year and reports that income in his tax return, which would be filed, let's say, by July of next year, then under the terms of the current provisions dealing with the penalty, it would not apply. And therefore, that was the root cause of the controversy, that having gone through the Black Money Act, the IDS scheme with higher rates of taxes and penalties, how could you allow an individual not to have any penalty in this kind of a situation? So that is what they seem to be trying to address by any potential changes in the law.
Mr. Kanabar, is this likely to be a clarificatory amendment, sir?
So if it is, then if the amendment comes through, as you are saying, it will be a clarificatory amendment. But what I heard Sapna say is quite a different thing. What I heard her say is that the government is actually proposing that if you still want to make a disclosure, you can make a disclosure and pay a tax higher than 45%, or higher than 45, which was there under the previous IDS. So if that is the announcement, that's a very, very different approach that the government is taking, and could be a very interesting approach to say that we had an IDS, you did not come clean under the IDS, we have now come out with the demonetization, and if you want to still make payment of tax, it is at a rate higher than the rate under IDS. I don't know if that is the proposition. It's a very different thing altogether.
That was the thinking that we were picking up. We still have Sapna with us. Sapna, you want to just clarify that for Mr. Kanabar?
Well, basically, yes, that was what was being proposed, because they had also softened the application of the penalty clause in 2016, wherein they had shifted it from penalty on concealed income to underreporting. So in case you're coming through and putting the money and paying 30% tax, it doesn't, it's not liable as, concealed income anymore. And also in terms of misreporting, well, there's a certain procedure for that. So that may happen once the returns are in and, as things pan out. But for something that you already paid tax on, it is becoming difficult in terms of the penalty provision. So to plug that, the suggestion that has gone through is basically to have a higher tax rate. The normal tax rate plus an additional tax rate of around 25 to 30%. Now, we don't know for sure whether it's the penalty clause that they are planning to amend, is something specifically within that, so that this differential, the rate differential between what people paid under IDS and what people are generally paying during the demonetization drive, even for suspicious deposits, has that, is that the route that they have chosen, or they have taken the route of the higher tax rate? My hunch here, or rather what my understanding was, it may be through the higher tax route.
Maybe to the higher tax route. Mr. Kanabar, you now want to comment on what you just heard from Sapna?
So as you can see, the two are sort of opposite paths altogether. Path number one is for the government to say, this is a scheme where if we find you depositing monies which you can't explain, you will not only pay 30% tax, but pay another 60% penalty, so pay 90%. Part number one. So if they amend section 270A, which is a section under which penalty is levied, they would change that section. In contrast, what I hear Sapna say is no. Then if they are going and levying a higher rate of tax, in which case they will not levy a penalty, they would come back and say, in respect of unexplained income deposited pursuant to demonetization, the rate of tax will be 60% and not normal 30%. So it's interesting to see which part does the government go to.
Yes, it will be interesting to see, and we're still sort of groping in the dark on what they have finally decided, because I would imagine, given the fact that Parliament is in session, the government has not come out with an official release on what has been decided by the Cabinet. They will first have to go to Parliament. Alok, very quickly, your comments on what you just heard from Sapna on the two proposals, one of which is probably what the government has agreed on.
Right. So if they decide to increase the tax rate under 115 BBE, which is 30% currently for unexplained cash credits and unexplained credits to the books of account, then they would have to make an amendment to that. Else, as Mr. Kanabar just mentioned, under Section 270A, which was introduced in this year's budget, they would have to make suitable amendments to ensure that penalties would be applicable in the situation that I described earlier.
So we're looking at possible amendments of Section 270 and or what was the other one that you mentioned, Mr. Agrawal?
So 115 BBE, that is the tax rate on 69 and 69A, 68 and 69A, sorry. And the penalty is 270A. That was introduced, that section was introduced in this budget.
All right, Mr. Agrawal and Mr. Kanabar, appreciate you joining us with that. So that's the big breaking story. We still need to get a confirmation on which route the government has decided to take, but it is clear the Cabinet has decided that it will be amending the Income Tax Act, and that is going to be something that they will take to Parliament in this session itself. Sapna,